Hey, everyone. Ready to dive into a potentially huge investment opportunity. We're talking Fannie Mae and Freddie Mac,
Oh, yeah.
those giants behind the U.S. mortgage market, and a prediction that has everyone buzzing,
Right.
900% potential returns. I mean, that's the kind of number that makes you sit up and take notice.
Yeah.
Even if you're not usually into the high-stakes gambling.
Right.
This is all coming from billionaire investor Bill Ackman.
Yep.
And his take on how things might play out for Fannie and Freddie.
Mm-hmm.
Now, our source for this deep dive,
Yes.
it's a Motley Fool article from January 4th, 2025.
Okay.
But it's actually focused on Ackman's prediction itself, not the companies directly.
Right.
So it's like we're analyzing a prediction
Yeah.
about a prediction.
It's a little meta.
I like it, but maybe we can bring it back down to earth for a second.
Sure.
What's the deal with Fannie and Freddie? I feel like I should know this, but a little refresher never hurts.
Well, they're essentially the backbone of the U.S. mortgage market. They buy mortgages from lenders,
Huh?
package them up,
Right.
and then sell them off as securities to investors.
Right.
And this frees up money for lenders to, make more loans.
Keeps the system flowing.
Exactly.
But this whole story isn't about smooth sailing, is it?
Yeah.
Didn't things go very wrong for these companies back in 2008?
That's right. The 2008 financial crisis hit Fannie and Freddie hard.
Right.
They were heavily involved in the subprime mortgage market. You know, those loans given to borrowers with less than stellar credit.
Yeah.
And when that bubble burst, it almost took them down with it.
And that's where the government had to step in, right?
Yeah.
With the whole conservatorship thing.
Right.
I remember hearing about that at the time, but I'm a little fuzzy on what that actually means.
So it's basically a way for the government to take control of a company to prevent a complete collapse.
Okay.
And in the case of Fannie and Freddie, it meant that while they continued operating,
Right.
all their profits went straight to the U.S. Treasury.
Oh, yeah.
Not a great deal for the shareholders.
Yeah, definitely not. Their stock values must have taken a nosedive,
Oh, absolutely.
which I guess is where Ackman saw an opportunity
Yes.
back in 2013, buying a ton of shares when everyone else was running for the hills.
Exactly. He was essentially betting that they would eventually recover
Right.
and that their share prices would climb back up.
It's a bold move.
Bold move.
And this is where Donald Trump enters the picture, right?
Yes.
I remember Ackman being a pretty vocal supporter during the 2016 election.
Yes.
It seems like his whole prediction is tied to Trump's policies.
It absolutely is.
Okay.
And during Trump's first term, we did see some movement that seemed to favor Ackman's bet.
Okay.
So for one thing, the net sweep of profits ended,
Right.
allowing Fannie and Freddie to actually keep some of their earnings.
Okay.
And they also had capital requirements set for them to eventually exit conservatorship.
Okay, so some positive signs, at least from Ackman's perspective.
Right.
But I'm guessing there's a catch.
There's always a catch.
This is the financial world after all.
Yeah, right. So the big challenge is that even if Fannie and Freddie are allowed to operate independently,
Right.
they would need a huge influx of capital
Okay.
to meet those capital requirements. And here's the kicker. The Treasury still holds so much of their stock
Right.
that any new shares issued would drastically dilute the value of existing shares.
Ouch.
Not exactly what current investors want to hear.
Especially those hoping for those huge returns that Ackman's predicting.
Exactly.
So that's a tough spot to be in.
It is.
So how does Ackman see this all leading to those eye-popping 900% returns?
Well, his plan involves a few key assumptions, many of which are directly tied to Trump winning a second term.
Oh, right.
Essentially, Ackman believes that Trump would use his influence to make sure certain things happen that would benefit Fannie and Freddie,
Okay.
and by extension, their shareholders.
Okay, I'm hooked.
All right.
Let's break down Ackman's plan step by step.
Let's do it.
What's the first move in this high-stakes game?
So he's banking on Trump pushing for Fannie and Freddie to get credit
Okay.
for all the payments they made to the Treasury during conservatorship.
Okay.
Think of it like getting reimbursed for past expenses.
I see.
This would theoretically wipe out a significant portion of their debt.
Interesting. So less debt, less financial burden.
Right.
What's the next piece of the puzzle?
Well, Ackman believes the capital requirement for them to exit conservatorship will be set at a relatively low 2.5%.
Okay.
Now, this is a crucial assumption
Okay.
because it means they'd need to raise significantly less money to meet the threshold for independence.
Got it. So less debt,
Mm-hmm.
a lower bar to clear things, are starting to sound a bit more optimistic, at least from Ackman's perspective.
Right.
Where does he see things going from there?
So his timeline has them raising the remaining capital needed by 2026.
Okay.
Hitting that 2.5% target.
Okay.
At that point, the Treasury, which still holds a huge chunk of their stock, would cash in,
Right.
make a hefty profit.
Right.
And everyone supposedly walks away happy.
Everyone wins. That sounds a little too good to be true.
It does.
I mean, we're at 900% returns. Even with all the political maneuvering, that seems like a long shot.
It is.
What am I missing here?
Well, you're right to be skeptical.
Okay.
Remember, we're talking about a lot of ifs here.
Right.
Even the Motley Fool article, while acknowledging that exiting conservatorship is more likely under Trump,
Right.
points out that there are still massive unknowns.
Okay, let's dig into those unknowns a bit.
Okay,
What are some of the potential roadblocks Ackman might be overlooking?
sure.
I have a feeling our listener wants to know if this is a bet worth taking
Yeah,
or just a billionaire's fantasy.
right. Well, for starters, there's no guarantee that the Treasury will go along with this whole credit idea.
Right.
They might see it as a way for Ackman and other investors to get a sweetheart deal,
Right.
at the expense of taxpayers.
Right, that makes sense.
Yeah.
The Treasury has to look out for the interests of the country as a whole, not just a handful of investors.
Right.
What else could throw a wrench in Ackman's carefully laid plans?
Well, the capital requirement itself could end up being much higher
Right.
than that 2.5% Ackman's banking on.
Right.
Remember, that number is just an assumption,
Oh,
not a guarantee.
right.
If regulators decide that Fannie and Freddie need a larger financial cushion
Uh-huh.
to operate safely,
Right.
well, that changes the whole game.
So, a lot of uncertainty, a lot of potential for things to go differently than Ackman expects.
Yeah.
It makes you wonder if this whole thing is more about politics than sound financial strategy.
It's a good point.
Yeah.
And that brings us to another crucial factor,
Okay.
the inherently political nature of this whole situation.
Right.
Remember, the Treasury still holds a massive stake in Fannie and Freddie.
Right.
Any decision about their future is going to be heavily influenced by the administration's priorities,
Wow.
and the political winds blowing in Washington.
Yeah. That Motley Fool article we mentioned earlier really emphasized that point.
Yeah.
It seemed to be saying that even if exiting conservatorship is more likely under a second Trump term,
Mm-hmm.
there's just so many variables we can't predict.
Absolutely. I mean, Congress could get involved and complicate things further.
So, yeah.
New regulations could be proposed.
All right.
There's always the possibility of some unforeseen event that throws everything off course.
So basically trying to predict the outcome of this whole Fannie and Freddie saga is like trying to predict the weather a year in advance.
That's a great analogy.
You might have some educated guesses, but there's always a chance of a sudden storm
Yes.
that blows everything up.
Exactly. And it's why the Motley Fool article,
Right.
despite painting a somewhat optimistic picture,
Yeah.
ultimately advises caution for anyone considering investing in Fannie and Freddie.
Okay, so maybe hold off on betting the farm just yet.
Right.
But even if this particular investment play isn't right for everyone,
Right.
you have to admit the implications of this whole situation go way beyond a few investors hoping to strike it rich.
Yeah.
I mean, we're talking about the future of the U.S. housing market,
Right.
which affects every single one of us,
Absolutely.
whether we're homeowners, renters, or hoping to buy our first place someday.
That's right.
So for our listener who's maybe feeling a bit overwhelmed by all this talk of finance and politics,
Yeah.
let's bring it back down to a personal level.
Okay.
What are some of the key things you should be paying attention to as this story unfolds?
Right.
What are the potential impacts that could hit closest to home?
Well, one of the biggest things to watch is the impact on interest rates.
Okay.
If Ackman's scenario plays out and Fannie and Freddie are successfully restructured,
Right.
released from conservatorship,
Right.
it could lead to more competition in the mortgage market.
Okay.
With Fannie and Freddie back in full force, they'd be vying for business
Right.
alongside other lenders.
I see.
This could put pressure on everyone
Yeah.
to offer more attractive interest rates,
Oh.
loan terms,
Right.
to entice borrowers.
So potentially good news for anyone in the market for a mortgage.
Right.
Lower rates could make homeownership more accessible, or at least make those monthly payments a bit easier to swallow.
Yeah, in theory, yes.
Right.
But there's also a flip side to consider.
Okay.
If investors lack confidence in the long-term stability of Fannie and Freddie,
Right.
it could actually lead to higher borrowing costs.
Really?
Lenders might see them as a riskier bet
Okay.
and charge higher rates to compensate.
So it's not as simple as saying Fannie and Freddie are back, everyone gets cheaper mortgages.
No, it's not.
There are a lot of nuances at play here.
Absolutely.
We also have to consider the potential impact on taxpayers.
Right.
Remember, they ultimately foot the bill if things go south.
Right.
And another bailout becomes necessary.
Exactly.
Right? That's a crucial point. No one wants to see a repeat of 2008,
No.
with the government having to step in and rescue these companies
Right.
with billions of taxpayer dollars.
Yeah. And speaking of 2008, I think a lot of people are understandably concerned about another potential housing bubble.
Oh, absolutely.
If Fannie and Freddie are given more freedom,
Right?
could that lead to looser lending standards?
Right.
And a resurgence of those risky practices that got us into trouble in the first place?
It's a valid concern.
You know, the subprime mortgages, the
Right.
no money down loan,
Right.
all that stuff that seemed too good to be true because it was.
Right. The whole house of cards scenario where everyone's buying houses that they can't actually afford, and then suddenly, boom, the whole thing collapses.
Right. Not a happy memory.
Not at all. And those who are wary of Ackman's plan worry that we're essentially repeating the same mistakes,
Uh-huh.
setting the stage for another devastating crash down the line.
Yeah.
But I imagine Ackman and those who support his vision would argue that a well-capitalized and properly regulated Fannie and Freddie could actually help prevent future bubbles.
Right.
They'd say that these companies, when operating responsibly, can actually be a force for stability in the housing market.
That's their argument. They believe that Fannie and Freddie, with the right oversight and safeguards in place, can promote responsible lending,
Right.
ensure access to affordable mortgages for a wider range of borrowers, and ultimately contribute to a healthier, more sustainable housing market.
So it seems like we're back in that prediction about a prediction territory.
Yes.
We're not just trying to figure out what's going to happen with Fannie and Freddie, but also what the consequences of those actions will be for the housing market and the economy as a whole.
Exactly.
It's a lot to wrap your head around.
It definitely is. There are so many potential outcomes, both positive and negative.
Right?
A lot depends on how things are structured,
Uh-huh.
how effectively these companies are regulated,
Right.
and, of course, those broader economic factors that are always swirling around us.
It feels like we're trying to solve a giant puzzle with half the pieces missing.
It does.
But I think we're doing a pretty good job of piecing together what we do know.
I agree, and I think we're giving our listener a lot to consider
Right.
as they follow this story and make their own decisions,
Right.
whether to believe the hype or approach it with a healthy dose of skepticism.
Well, I'm feeling a bit more informed already.
Me too.
But before we get too carried away with patting ourselves on the back,
Right.
I think there's one more crucial question we need to address.
Okay.
Let's say, for the sake of argument, that Ackman's prediction comes true.
Okay.
Fannie and Freddie are restructured. They exit conservatorship. They're deemed healthy and ready to roll.
Right.
What does that actually look like in the real world?
Yeah.
I mean, how would this impact the average person who's just trying to buy a house,
Yeah.
refinance their mortgage, or maybe rent an apartment?
That's a great question, and it leads us into some really interesting territory.
All right, so let's fast forward a bit and imagine Ackman's bet plays out exactly as he predicted.
Okay.
Fannie and Freddie are out of conservatorship.
Oh.
They've got their financial act together, and they're back in the game.
Right.
What does that mean for you if you're thinking about buying a home or refinancing your mortgage?
Well, one potential outcome is increased competition in the mortgage market.
Okay.
With Fannie and Freddie back in full force, they'd be vying for business
Right?
alongside other lenders.
Okay.
And this could put pressure on everyone to offer more attractive interest rates and loan terms
Okay.
to entice borrowers.
So potentially good news for anyone in the market for a mortgage.
Right.
Lower rates could make home ownership more accessible, or at least make those monthly payments a bit easier to swallow.
Yeah, that's the optimistic scenario. But of course, there's always another side to the coin.
Okay.
If investors aren't convinced about Fannie and Freddie's long-term stability, or if they perceive them as being too risky, it could actually drive interest rates up.
Really?
Lenders might see loans backed by Fannie and Freddie as riskier,
I see.
and to compensate for that risk, they might charge higher interest rates. That could price some potential home buyers out of the market,
Right.
or make refinancing less appealing.
So it's not a guaranteed slam dunk for borrowers.
Right. It's not as simple as just saying lower rates for everyone.
Right.
There are a lot of factors at play.
It really highlights how everything's connected, doesn't it?
It does.
It's not just about what happens within those companies,
Right.
but how the entire market reacts to their actions
Absolutely.
and their perceived level of risk.
Exactly. And let's not forget about the taxpayers.
Oh, right, the taxpayers?
They're the ones who ultimately foot the bill if things go south.
Right.
And another bailout becomes necessary.
Nobody wants to see a repeat of 2008.
No.
With the government having to step in and rescue these companies with billions of taxpayer dollars.
Exactly. And speaking of 2008, a lot of people are understandably worried about another potential housing bubble.
Oh, yeah, for sure.
If Fannie and Freddie are given more freedom, could that lead to looser lending standards and a resurgence of those risky practices that got us into trouble in the first place?
It's a valid concern. We saw how quickly things can spiral out of control when lending practices become too relaxed and people are taking on more debt than they can handle.
Exactly. A sudden shift in the market, an economic downturn, an unexpected rise in interest rates could leave a lot of homeowners underwater, struggling to make their mortgage payments.
It's a domino effect with potentially devastating consequences.
It is.
For individuals, families, and the entire economy.
That's the fear of those who are wary of Ackman's plan.
Right.
They argue that we might be setting ourselves up for another crash down the line.
Yeah.
By loosening the reins on Fannie and Freddie.
But those who support Ackman's vision would counter that argument, wouldn't they?
They would.
They'd say that with proper oversight and regulation, Fannie and Freddie can play a vital role in a healthy and stable housing market. They could promote responsible lending, ensure access to affordable mortgages for a wider range of borrowers, and overall contribute to a more sustainable system.
That's their argument.
So we're back to those competing predictions again.
It seems like it.
Trying to weigh the potential benefits against the inherent risks.
Right.
So much hinges on how these companies are structured.
Yeah.
How effectively they're regulated and how they choose to operate within the market.
Absolutely. It's a complex situation with a lot of moving parts.
Right.
And ultimately, only time will tell what the long-term consequences of this whole Fannie and Freddie saga will be.
Well, we've covered a lot of ground today.
We have.
We've explored Ackman's bold prediction, delved into the history of Fannie and Freddie, examined the potential risks and rewards, and considered the implications for the housing market and the economy as a whole.
Yes.
I'm feeling much more informed. How about you?
Absolutely. I think we've provided our listener with a solid understanding of this complex issue, highlighting the key points and offering some food for thought as they continue to follow this developing story.
And that's what the deep dive is all about, right? Giving you the tools and insights you need to navigate a world overflowing with information.
Exact.
And form your own conclusions.
We don't have all the answers, but we can help you ask the right questions.
So as we wrap up this deep dive, we'll leave you with this thought.
Okay.
Keep a close eye on how Fannie and Freddie behave if they do make their grand return to the housing market.
Right.
Are they truly contributing to a more stable and equitable system? Or are we simply kicking the can down the road towards another potential crisis?
Good question.
That, my friend, is the billion-dollar question. And the answer, well, that's for you to decide.